Well, welcome to the video. In this video, we're going to talk about expectations, specifically expectations when you're looking at what I call the underlying. And the underlying for me is using the underlying stocks or the underlying combination of stocks or signals that are in the equity market to increase your edge when you're trading futures. Now, I trade the NQ, the NASDAQ index, every single day. That's my main primary thing that I trade. So what I'll use as an examples in these series of videos will be based on the NQ. But you can do this in the ES, you can do this in the Russell, pretty much anything that has the equities as an underlying index. Now you're looking at right here, you're looking at what I call the 3-chart setup. We'll go through this in another video, but I wanted to start here because in my streams, and I guess one thing I should say is I've stopped streaming. I'm going to stream twice a week. And one of the reasons why I stopped streaming is because streaming was affecting my trading in negative ways, and I couldn't figure out how to deal with it. I think I figured out how to deal with it and how to stream and trade my style. I wasn't trading as effectively when I stream. And I know if you're watching my stream, most would say, well, you're doing pretty well, having green days. I'd say the last 2 weeks, I haven't really lived up to my trading style, and I'll do another video on this. Actually, that's probably the best thing. So let's just I'll talk about streaming. I'll talk about some of the challenges I've had in another video. For this video, let's stay focused on the internals. Now you're looking at the 3-chart setup that I often pull up in my streams. We'll get to this. This will probably be the end video because it needs a lot of setup. But one of the things that I often do is I say, well, let's look at the underlying. Now, when I say underlying, what I mean is look at the underlying stocks that are weighted, that make up the NASDAQ. So if you're not familiar, and I'm just going to start with the basics. If you already know this, I do apologize. But the NASDAQ is weighted. So here we're looking at the actual weighting. What weighted means is basically, you'll see here Apple. The weight of Apple, as far as how it makes up the index, is at a 12, percentage-wise. Microsoft is at 10, Amazon 6, and so on and so on. So when I talk about looking at the underlying, I don't look at all of these. I go as far as maybe NVIDIA. That's as far as I go. Just because after that, it's all twos and it's basically all the same. What you'll find is in the underlying, if you track these top 8, they match what's happening in the futures market very well. They're weighted in such a way that if they move, if 2 or 3 of these move in the same direction, it's pretty much guaranteed that the other ones are going to follow. But it also has enough weighting where it actually affects the index itself. So you could just watch these, and that's what I've set up in the underlying. So if we go to just a basic chart, and actually before we do that, because we're going to cover this in another video, there is actually an equal weighted index that you can also follow as well. And there's some edge that you can get from that as well. We'll talk about that in another video, but I wanted to cover that for completeness. So let's just go to a basic chart. Let's look at one actual equity, one stock, and I'll talk about expectations. So here we're looking at Facebook on the daily time frame, and oftentimes in my stream or my trading, if you're following me in Discord, Telegram, not so much Twitter because I just don't share on Twitter. I did start a Reddit page or actual section as well. That'll be linked down below. So everything that I'm on will be linked down below. But oftentimes in the middle of the day, maybe I'd say 2 hours into the day or maybe in the afternoon, what I'll say is I'm going to look at the underlying. And what I mean by that is I'm going to look at the top 7 or 8 stocks that really make up the underlying market. And I'm looking at, and they're weighted, and looking at how are they stacking up. And what I'm going to start with is expectations. The expectations are, and this is within the expectations of the system that I teach, which I think is one of the best systems on the planet for trading momentum. And it's the expectations of how that day is stacking up. And what would be my expectations based on how I see the chart forming. Now, we'll go through this, how I go through this in real time, and maybe in another video I'll do this in real time, or I'll point out the areas when I do it in real time. And I'll do another video where maybe I'll do a series of days where I'll just record doing it in real time and just put those together. I think that'll be valuable. But here the market's closed. It's 16:09, 4:09 p.m. So we're seeing the end of day action. Now, when it comes to expectations, I would ask for those that are members of my training, for those that maybe are on YouTube trying to adopt my system, what you see on the chart, does that meet your expectations of what you would expect to happen given the bias and the momentum of the chart? I'm going to give you 2 seconds to answer, but because we really can't communicate with each other, I'm going to give the answer for you. Because the answer should be undoubtedly yes, based on this individual chart. Why? Well, first up, it's a biased short chart. Biased short because why? Price is below the RDA. It's momentum short. Why? Because price is actually below the momentum indicators. Now, today it went up, and what did it do? It tested the momentum indicator. It's not the first test. There are various tests here. There's a test right here. There's an overshoot, a pretty big overshoot here. And then there's various tests here from this bottom. But I would ask you once again, as you pull up this chart, what are your expectations? Well, the first expectation is that if it does exceed this price, it does exceed the momentum indicator, you're looking for a solid close above. But what we see here is this fits the expectations of the system we trade. It hit the momentum indicator. It didn't close above. Momentum is still momentum short, but it is showing some intention that it actually wants to actually go above it and maybe go up and test the RDA. Okay? So that's what I'm looking for. What I'm looking for is I'm looking at the chart from a higher time frame perspective. And usually if I'm doing this in the middle of the day, what I'm looking for is what is the next momentum check? What do the levels tell me? Is there room for the afternoon session, for instance, to close at the high? Or does it look like the afternoon session, for instance, wants to close at the low? Maybe it's nearing a momentum check. Now, I'm going to go through all these various stocks, or the various weighted stocks here, equities. And we're going to look at it, and I'm just going to do some brief commentary. So first up, let's say the market was open right now, okay? And I'm going to go through it that way. The market was open right now. I would look at this and say, okay, well, it rejected off the momentum indicator. It's rejected off the low here. And let's say it was there was 2 hours left in the session. I would almost say that there's no real edge here other than to say that I probably should be looking for the short side because it's given up the weekly open, and it's actually given up the slow momentum indicator. But it's still above the fast momentum indicator we can see here, and it rejected there. I would probably be biased short in this situation just because the chart's biased short, the momentum's short. So on this chart, I'd be thinking short. As we go to Apple, same type of situation. What do we see? We see the same type of thing, an overshoot of the fast momentum. We have the RDA above, and it rejected kind of at a similar level that Facebook did, or Meta, sorry. Meta. I'll never be able to call it Meta, especially with the actual, the FB as its actual ticker. So same type of pattern. So Facebook or Meta and Apple have the same type of pattern. Amazon. We get a little different look in Amazon, don't we? Here, we're seeing that it's a solid close above the momentum indicator. We've got another weekly open right here at this level, which is right where it rejected off of. So at a minimum, what I'd be thinking is that, okay, there's room in possibly Amazon to come up. Remember, I'm acting like this isn't closed, so the day's still open. There's actually room for it to actually bottom here and actually come up and retest the weekly open again. That's the view I'd be getting of Amazon. Microsoft. We get a different look here from Microsoft. And this is actually more of a long view. So we're starting to get a mixed view of the underlying. The first two showed that they were kind of biased and or they were definitely biased. All of these are biased short, but it was showing that it was still momentum short. Well, here we're starting to see an initial shift of momentum because what happened on this day here so far? Well, number one, the previous day closed solidly above both momentum indicators. As well today, what did it do? It did exactly, remember, expectations. It did exactly what we would expect. It tested the momentum indicator, and it found support where we would expect, came short of the actual open in that level, and then it obviously found buyer support from there. That fits our expectation. But this chart is telling us on the underlying that, hey, it's momentum long. While it's still bias short, it's momentum long. Where do we expect price to go? We expect price to go up here to the RDA, at least to do an RDA check. After it's closed above these two momentum indicators, that's really what we're looking for. We are looking for clues on a lower time frame that it maybe is just an overshoot of the momentum here and it's going to fail. We're looking for clues of that. But right now, so far, it's met our expectations of a long environment. It's a fade trade. Keep in mind, this is a fade trade because what is the momentum is short, the bias is short. Ultimately, it's a fade trade. You're not going with momentum. It hasn't turned momentum long yet. The chart's not momentum long. The chart's not bias long. It's still momentum short and bias short. Let's look at Google. Google, similar type of pattern as Meta and Apple. We see a overshoot and a rejection and the RDA above. Tesla, same type of action. We see a momentum overshoot, failure, but it's still above the other momentum indicator. So we're getting kind of a picture here of the underlying, and what we're seeing is we see two charts that are a little bit more momentum long, or I'd say early momentum long, and then we're getting other charts that are based on our expectations are behaving as how we expect, meaning they go and check the momentum and they fail. Now, ultimately though, what you then want to look at is you're looking at levels, you're looking at price action, you're looking at other indicators, because what are you trying to do? And this comes back to the NQ. You're trying to look for clues of what is the pattern in these underlines that are weighted that you can get some edge to trade upon, meaning to have more conviction. So in these current chart patterns, I'd probably be more apt to go long on a pullback that looks like it was going to sell off. And that's kind of what we saw today. If we actually go to the chart today. So I want to go to this section of the chart, and actually specifically what I'm going to do is, just so you know that I'm not going back and saying, hey, this is just me just making this up on the fly. So this is in Discord, and at let's see, what time was this? Sorry, I have to move this out of the way. At 1:37, so 13:37, 1:37. I was short already, and I did stay in short for this whole move, but my target ultimately was 16.16. That was kind of the target I was looking for. And then at 16.16, as it was getting down there and it was starting to stall, I was saying, well, is 548 the next level? But if one thing is, I was in treatment today, so about the time this trade ended, where I would have went long, which I wish I would have, I was leaving from the treatment center. So I wish I would have been around for the long trade, but I was around for the short trade. So I called the level pretty well, because if you look here, and let's go to that exact time. Let's go to the 1 minute chart, and that was 13:37. So where is that candle here? That candle is right here. So on this candle right here in Discord, I was saying, okay, to me, the downside target, I'm going heavy, I'm going short, is 616. So the 616 handle, which is right here, right around here. So the 616 handle is right, I'm not going to be exact, but right around here, a little bit higher. What I'm really looking for on the 5 minute is it, yeah, it might exceed that, but is it going to close above that and stay above it? And then is it going to go long from there? That's what I was saying in Discord. I was saying, look, I'm short. Target is 16.16. Around that area, I'd be looking for structure on the small tick chart, and then I'd be looking to go long. We look at the 5 minute chart. We see that was a pretty good area, pretty good call there. I wish I would have been around to trade this and go long. I would have at least captured at least half of this move. Hopefully wouldn't have been able to stay in for here. Not sure if I would have sold off here, but obviously if I was reading the small tick chart, I probably would have. This was two really great trades that I missed out on here because I was in treatment on my way back home. So, but this is just a prime example of what When I made this call on the 1616, number one, I was reading the NQ chart, I was reading the tick chart, but also I had just looked at the underlying. So I had gone through those charts like I showed, and I made the assessment that there was a bigger probability based on how the index was stacking up, but also based on the structure of the 7 underlying equities that I showed you, that there was room for a sell-off, at least one of those kind of fake out sell-offs where basically typically, or not typically, sometimes in the afternoon you'll see that. It's been today was kind of a range day, but it's been kind of a very clear momentum day. And then typically in the afternoon, you might get an opportunity for one fake out move where it looks like it's going to sell off, hit a key level, it sells off, and then it stops and then it rips back up. That's what I was looking for today. I was looking for that narrative. And by looking at the underlying, I was able to have greater conviction for me to take the short that I took. The system said go short anyways on the NQ. It's just using the underlying gave me, especially with the concept of expectations. And the expectations were based on looking at the underlying. And let me look at this from a different view as well. So I know for most people that aren't used to looking at my charts, you're going to look at this and say, damn. Well, number one, I'm looking at all 6 right there in one chart. But you're going to probably look at it and damn, there's a lot of just lines and stuff on here. I can look at this stuff because I've trained myself to look at it at a glance and basically go from chart to chart to chart and get a feeling of how that day is stacking up, where the next momentum indicators are. So you can see here, it's above a weekly indicator. It's got a couple weekly indicators aligning with the RDA here. So for instance, on Apple, you can see that the weekly indicators are aligning with the RDA. Let me ask you a question. For those that trade the system, if you are day trading Apple, and especially the options, if price gets up here to the 15377 level, given the system that you trade, I'm talking specifically to members or people that, on YouTube that actually trading my system, if it gets up here, would it be worth maybe looking at the options chain, or if you do day trade futures, or day trade, Apple, for instance, wouldn't that probably be a good short opportunity with 2 things aligning, especially with a breakdown level? So as price gets up to this level, this would be something I'd be looking for a high probability short. One of the reasons for that is because you've got a couple different things aligning here. And I know I'm getting off on a tangent. I haven't done that in some videos, but now I'm starting to do it. But you have a couple things aligning here, and you have very clear areas to tell you where you would be wrong, where you could cut that trade for a pretty big risk reward, given the amount of room, if it does get up here, where it would come back and check to see if it wants to remain long. So that's an example of something I can just see, just because once again, I'm trading my system. I've been trading it for years. Then let me just take another slight tangent. This is the other benefit of trading one system and not changing it. If you're adopting my system, maybe you're not using everything, but you're using components of it. What you'll notice, and I see this with people that just come on board, and after a few months, because they're trading the same system and they're seeing me share the same system and we're talking about the same things and the rules don't change. The rules are the same, the indicators are the same, things don't change. You have one baseline. So that's the way that you can incrementally improve, because you have a baseline that doesn't change. So you're always looking at the market, no matter what market you're looking at, what time frame, you're looking at it through the same baseline. So that's why I can look at all these charts in the matter of probably under 20 seconds, if not shorter, and get a general gut feel of like, does this add conviction to my short? Is there room, based on the way the daily chart is being structured, for it to sell off from this level? Well, where has it previously sold off? Where has it found support? Where is it at in regards to levels? Is it an inside bar? Is it an outside bar? Is it closing above? All these questions can be answered really quick. And in regards to the indicator in the system, the indicators in the system that don't change, that are reliable, high probability. So that's kind of, this is how this is, I'd almost say, if you're not doing this, and let's say you're not trading my system, you're just trading a system. If you don't have a baseline, you are screwing yourself up every single day, because what you're doing is you're changing way too many things. You need to have a baseline, trade off that baseline, because that's the way you're going to incrementally get better at reading the market and trading the market. So hopefully I was clear on the expectations. This will be more clear as I kind of move forward and cover this in detail. And I think what I'll do is I'll remember the times during the day that I go back and check the actual internals, and I'll make commentary when I do that. And maybe if I do that over a couple days, put it into one video, I think there'll be some, I think that'll reinforce the concepts that I've shared here. So the next couple of videos, like I said, will be on internals. We'll be just getting deeper into internals and why I use them, how I use them in the trading system, how I use them to increase edge. I will say this, sometimes I trade and don't even look at them. So sometimes I don't, and truth be told, I probably don't even need them. But it does help me get further conviction and edge when I see things align. So this is something that is really within the trade system. I would say if you like it and you like this type of additional information and you like to kind of see a broader picture, this is something that would be helpful. If you don't, I don't think you need it. I really don't. You can trade the system without even looking at these internals. I just find I'm a student of the market. I enjoy it. But also I feel like I get additional information and conviction from looking at these internals. But if you were to ask me, is it absolutely necessary? No, 100% it is not necessary to dive into these internals, which is probably a great way to sell, or not sell, but a great way to talk about, hey, you should watch the rest of these videos. But really the videos are really for only people that are interested in kind of these internals and what they and how to use them, or how I use them and how I think you can use them. So that's the way I would look at it. So if you're wondering, well, geez, this is just way more information than I need, you're probably right. If you're of that mindset and it's just way more information than you need, I would go with your gut on that, and just trade the index, just trade the futures market as is. There's enough edge in the system to do that. So you don't need these additional market internals, so to say. Well, that's all for this video. I know this is a little, not a little, it was longer than I anticipated, but I haven't done videos in a while, so I got to get back into the mindset of, hey, I got to shorten these things up. Down below, you'll find links to Discord. If you are interested in the single best trading system, I believe, on the planet, which is the one I created, the Rexdog trading system, you'll see a link to the website. I'm adding a little bit every week to further go into detail and explain it for those that aren't familiar with it. You'll find more information on my website. Check out the FAQ, check out the various pages. I look forward to seeing you in the next video.